Well, let's track the China market open with our next guest, who says Asia will continue to underperform the US this year. Mark Matthews is head of Asia research at Julius Baer in Singapore. Mark Matthews, thanks very much indeed for joining us. First of all, what's your thinking behind that?
The thinking is that India and China combined are over $4 trillion in market cap, and so they really dominate the Asian exchanges and the MSCI Asia ex-Japan index. So even if there are good stories in Asia, in places like Korea domestically or Southeast Asia in general, or the frontier markets of Asia, these big markets of China and India have sufficient problems, in my view, to prevent the whole Asia MSCI Asia index from going up, and therefore, I don't think it'll do as well as the U.S., where clearly the results have been very, very good coming out of companies there.
Mark, I want to just also talk to you, before I get on to the region itself, just talk to you about the debt crises that we've got in the US and Europe. I mean, in your research, the investors are taking a sanguine view of this and regarding all this as just being temporary. But I'll put it to you that the US may be temporary, but surely Europe has more deep-seated problems.
I agree, actually. If I had to put my money on one of them, I mean, neither of them are good, but I'd put my money on the U.S. for the simple reason that I think the problem is less complicated and the institutions are older and stronger and more tried and tested than in Europe. So I think that when we look back at this current time 3 years from now, we'll look back and realize we got past it, and I think 3 years from now there will still be a euro, but whether it's at $1.02 or $1.08, I don't know. It's both sides of the Atlantic. There's a lot of politics, but if I had to put my bet on it, money on it, I'd actually think that the Americans are better suited to solving their problem.
Mark, when we look at this year so far, I mean, if the benchmark index is up just about 1%, the MSCI ex-Japan index anyway, and this is against the backdrop where we've had, we've just been talking about the US and the European debt crisis. On top of that, we've had that earthquake and tsunami in Japan, then we've had the Middle East crisis, and compounding all this, inflation in China too. So, funny year, a lot of event risk, but we're still higher.
Well, I mean, if you want to call 1% higher, you can, but it's basically flat in my opinion. And you're right, I think the index has held up surprisingly well. And if you look at volatility, it's still very, very low. I think in March of last year, when we last had debt crisis in Europe, the VIX index got to as high as 48, I think, and now we're still at about 19. So, yeah, I think there's complacency in the market, but I think the bottom line is that we have something in Asia that the U.S. does not, which is inflation in the two major economies of China and India. And this inflation is not going away, in my opinion, and the longer it persists, the more it will drag down revenues, because people will spend and invest less, and it'll squeeze margins, and it'll raise interest costs. So I don't see either central bank in those countries cutting rates anytime soon. I think the earliest is probably sometime in the first quarter of next year, maybe second quarter for India. That's still 6 to 9 months away, and 6 to 9 months is too early for me to get all excited about stocks.
So, Mark, where'd you put your money at the moment? Where's the advice? What's the advice you're giving?
My advice is for people to go for what I call small Asia. So I think this is a story this year of small over big. And when I say small, what I mean is Southeast Asia. I think Southeast Asia was, way back before India and China were even on the radar screen. It was the place where foreign investors came to invest in Asia. That's back before the Asian crisis. And then after the Asian crisis, right up until about 6-7 years ago, it just went through this phase where it was an exotic value kind of asset class and really off the radar screens. But since about 06-07, markets like Thailand and Philippines, Malaysia, Indonesia have been coming back on people's radar screens, and I think for very good reasons. And those reasons are, the high soft commodities prices, which are very beneficial for those countries, large populations which are underpenetrated in basic services and products, What else is there? Currencies which are gradually appreciating in tandem with the renminbi, and manufacturing sectors which benefit from the rising wages in China. So it's interesting to me that despite all the problems in Europe with their credit crisis and the U.S. with their potential debt ceiling crisis, that these little markets have just very quietly been reaching new highs pretty much every day, markets like the Philippines and Indonesia. And I think they'll continue to do so. I think they've got good stories. So I like Southeast Asia. I also like the frontier markets, which are Pakistan, Sri Lanka, and Bangladesh.